Okay, welcome back. Welcome back, guys. Welcome back to accounting tutorial online class. So this is your part 2 of our lesson for what is liability. Kanina, we discussed about the definition. We went through about the definition of the current liability. So by now, alam na natin ay classify that all of this, that these common accounts are actually current liabilities. So right now, let me proceed with discussing about the non-current liabilities. But before I start, I want to ask a favor from you guys. Please check our page, Accounting Tutorial Online Class, and like it, share it with your friends, and if you happen to watch this video, share this naman for your classmates and friends. Sharing is caring, diba? Okay, so this is Carmi, your accounting tutor for today. All right, so we'll be discussing about the non-current liabilities. Okay, so let's start. Are you ready? Okay, so non-current liabilities is a liability or debt. It's a form of debts or obligations. Again, debts. Diba? Yan. Utang. But the key here is that it's more than a year. So more than a year. So technically, titingnan natin palagi ngayon kung ano yung date specifically para malalaman natin na it should be classified. Kasi if later on you're going to be asked problem, classify or compute for the non-current liability in this problem. Ngayon, alam mo na siya dahil you only have to look at if it's more than a year. Okay, so I'm gonna cite some examples of non-current liabilities, assuming that all of these are long-term, okay? Long-term loan, long-term notes, and then bonds payable, which is also should be long-term as an assumption for this, for the purpose of this class. Okay. Right. Again, notes payable can be, sometimes can be current, but don't be confused, guys. Right now, what we're going to tackle is actually to determine how would you know it's it's part of the non-current liability. Same with loan payable and then bonds payable. Okay, so let's proceed. Okay, all right, so long-term notes payable. So let's read. So what is long-term notes payable? These are actually obligations for debts. Again, so diba? Guys, ulit-ulit na tayo. Obligations or debts. Para talagang maintindihan mo how it works. No? I'm just checking my technicalities to make sure that we have everything we need. All right, good. Okay. Owed to other parties for services received or goods purchased on account and supported by promissory notes. So ito yung key nyo dito. May promissory note siya. Issued in favor of the seller. So the rest, it follows na pare-pareho siyang obligations, lahat babayaran, lahat part siya ng payable ng company. But this time, if you see that there is some in the problem, if you can see a promissory notes that's mentioned, then you would know it's a notes payable. Okay, let's take this for an example. CPORs Inc. obtained a loan from SBC Bank in the amount of 50, and then the promissory note is payable 2 years. Okay, 2 years. From the initial issue of the note, which is January 1, 2020, which we assume 2022 ang maturity. Okay, so dun pa lang, you have already identified that this is a long term. Okay? So, because of that, our sample entry would be a debit to cash and a credit to notes payable. So, with all the other interests and the, on how we would classify the entries going forward, we will discuss that later on. But at least for proper identification, it's just because you obtained the loan, you've received the money, and then now you're going to set up your liability, which is notes payable, which is 50,000. And being an accountant, you will have the obligation to monitor this until maturity. Okay? All right, so that's your notes payable. Any questions so far, guys? Oh, easy peasy. Sige. Next. Okay. So this one, hold on. Okay, so a little bit of glitch. Sorry, guys. Okay. Okay, we've discussed non-current and we have talked about long-term notes payable. Right now, let's talk about long-term loan payable. All right. Let's see. Okay, so the long-term loan payable, as discussed earlier, na loans yan. So, yan yung mga possible car loan, housing loan, personal loan. Pero in this case kasi, normally ang personal short-term. So let's not add that, sorry. Okay, so yan. So long-term loan or the unpaid principal balance. Okay. Not due within 1 year. Again, because it's not yet due, kaya nandun siya naka-classify of the balance sheet date is reported as a long-term liability. Question. What if there is an unpaid principal balance that will be due within 1 year? What will happen? Definitely it's going to be classified as your current liability. So that's why loans payable can either be part of current liability and a part of non-current liability. Okay? All right. So let's assume that CP Paors Inc. has a 2-year loan. Again, ayan. Payment of 30,000 consisting of an interest payment of 36 and a principal payment of 1,250 per month plus interest. So the question here lang is just to show you, not actually the question, it's more to illustrate with you ano yung sample entry natin when recognizing a non-current liability. So, of course, dahil nag-obtain tayo ng loan, nakakuha tayo, naka-receive being a company ng cash, 30,000 and a loan payable of 30,000. And again, being an accountant, you will now start to monitor this, the entries, whenever you are actually paying your amortization. So every payment, dapat nababawasan yan. Kasi hindi forever na 30 yan. So over the course of time, nag-offset yung payments mo against this payable setup. Question? Clear as mud? Okay. Okay. Thank you. All right. Next. Aside from long-term notes payable and loans payable, we got bonds payable. Ito, interesting to. Let's see. So the bonds are common. Yeah. Okay. So bonds are a common form of long-term debt. Okay. Common no siya. Yan, a form. A promise to pay. So ikaw yung company, if you issued bonds, you have the promise to pay a series of payments over time, which is the interest component, and a fixed amount at maturity. So, kung this one, pagdating sa company, it's a form of liability. Okay? So I'm just giving you another context. Pagdating sa other party, like if you're the lender, or ikaw ay individual who's interested to buy bonds, this is gonna somehow like your investment. Why? Kasi you're earning eh. They're gonna give you, like in this case, your money will earn 8% interest income, because you have lent your money for them. So in exchange of the bonds. So let's have an example. Okay, if CPA Inc. issued 100 of its 5-year. Okay, so this one you can see already is a 5 year, so it becomes a non-current liability with a 1,000 face value, meaning what per bond it costs about 1,000 face value, and with that, the company is willing to give 8% interest when you buy its bonds. So the following entries would be required assuming bonds are issued at par value. So merong bumili ng 100. So kunyari yung inisyo niya na 100, may isang company na ito yan, tender, kinuha niya yung po niya. So 100 times the 1K becomes the here, 1,000. So willing siya. And then you will recognize your bonds payable at 100,000. So ano mangyayari sa interest? You can actually compute that when is the kunyari you're gonna compute for the first month. Okay, so let's have a very simple computation. So that would be like 8%. Calling our calculator friends. Kung may Google friend, may calculator friends ang mga accountants. Diba? Yan talaga accountants. Hindi lahat memorize. 8,000. Okay. 8,000. So assuming that's 8,000 is per year. Or sabi natin one, for the 5 years. Ay, ang baba, no? Okay lang, yaman na. Per computation lang. So 1,600. So 1,600 will be your per annual. Oops, 16,000. Okay. And then that's prorated by 1 over 12. So it's like 133 cash. So meron kang set up ng debit, interest, expense of 133, and then interest payable of 150. Okay, that's on the portion of the interest. But that's just another illustration. But for purposes of this discussion, we just have to identify if bonds are actually part of long-term liability or non-current liabilities. All right. Okay. All right, so that's of the common accounts under the non-current liabilities. Review natin kung saan ba natin nakikita sa financial statements yung liabilities section. Okay, here. Ayan. So, in the balance sheet, it's in the lower portion. It's part of the liabilities and equity. Okay, nakikita natin, nakasegregate si current at saka si non-current. So again, ito yung nag-describe ko kanina. Loans payable, pwede siyang nasa current, pwede din siyang nasa non-current. Depende kung alin ang mag-due. Alright? So laging ganon. Accounts payable and accrued expenses. Perfect. Ayan, meaning lahat ng yan, settle natin within 1 year. Very good. And then, yan, taxes. Nakita natin yan kanina. Ano pa yung common natin na discuss? Yeah, in terms of the non-current, medyo may specific accounts sa San Miguel na wala dun sa commonly used. But at least we have identified, siguro wala siyang issue ng bonds this year. Yan, kasi this is 2017 saka 2016, malay mo, nag-issue siya mga 2018 na. So wala lang dito. But should be here kapag, if ever, diba? And then, possibly some, what is it called that? Bonds and loans and notes. Wala din siyang issue this time. So, but if there is, then we might be able to see it here. Okay? So, on how to read this one, later on na yan. Pag medyo sanay na tayo sa concepts. But basically, sige sa bonus na is just, looking at noong 2016, 379 million. Noong 2017, 361 ang current liability nila. Bakit kaya? Probably, konti lang naman yung variance, so I don't think this is something na tinatanong. Pero just for purposes of this discussion, probably mas mabilis sila nakapagbayad this time. Mas marami silang sinettle na cash or na payable than last year. Okay? Alright, so yeah. Questions? If you don't have questions, this is your accounting tutor for me discussing about the liabilities. And again, before you go, please like our page, share this video, and leave a comment, and for us to see what else can we discuss for you. All right, take care. God bless, and bye-bye.